Hi there, you're watching Markets Tomorrow right here on ET now in the Mumbai News Center. I'm Tanveer Gill. The market for its bit managed to close above the 5900 mark in the intraday graph, but it continued to remain range bound, though support was found at that level. Commodities continue to look good, so there was a fair amount of interest that came into the pack. Tata Steel, Hindalco, Jindal Steel and Power, the stocks which continue to do well. There was some activity in defensives. And largely, the IT majors continue to reel under pressure, as did cement as well. On the show, then, lined up over the next 30 minutes, we have key voices in Sanjeev Prasad, the Senior Executive Director and Co-Head, Kotak Institutional Equities. Dipan Mehta, member BSE, also joins in. Member BSE and NSE, may I add to that. And Ashwini Gujral, Fund Manager, ashwinigujral.com, will give us his perspective on the technicals as well. Okay, just a quick highlight of the market trends this afternoon. As we closed trade, we had, like I pointed out, a fair performance, range bound, with the high being 59.36, low being about 58.80. The market somewhere closed in the middle at 59.16 odd. We also saw a fair amount of interest coming in individual stocks, but as I pointed out, metals continue to be the mainstay. The market breadth was negative, but stocks such as Hindalco, Tata Steel, Jindal Steel and Power did well for themselves. You had among the key losers Ambuja Cement. In fact, the entire cement pack looked weak. Sun Pharma, BPCL, Jayaprakash Associates, all of them lost ground in this session. Some of the stocks on the back of the election results in Gujarat, which were in focus: Adani Enterprises, Adani Port, Adani Power. We also had Torrent Power, which was in focus in the session. And then the likes of Pipavav Shipyard, Gujarat Fluorochemicals, Syntex. Those are some of the stocks that the market kept an eye on the back of the Gujarat election results. Let's go across to our guests then and get their summary of trade today and how things are expected to pan out going forward. Come to you first, Dipan. Good evening. What's your sense of how things will shape up as we close out 2012 and how things will look at the start of 2013?
I think that we are seeing gradual build-up of interest coming in from the local investors as well. I think FIs have been gung-ho on our markets for last several months or so. And I think if the market stays at these elevated levels and there's a pickup in the primary market as well, then you will see domestic retail investors also getting into the action. What is interesting is that, apart from the index actually, to put it another way, is masking the kind of activity which is taking place, where we are seeing a lot of mid-cap stocks, small-cap stocks coming into action, and investors getting excited about their prospects. So I think markets are getting into the groove. They are, getting into a situation where there are several news stories to talk about and attracting investors every passing day. And my sense is that this trend will continue into 2013 as well. We are seeing gradual improvement in the fundamentals, domestic as well as internationally. And I think the biggest event to look forward to in the new year would be the RBI policy, and when does it actually start reducing interest rates, because that will have a kind of a very major impact on corporate earnings, on discounting of stocks in terms of P multiples. So that's the major highlight to look forward to early in the next year.
Right, Sanjeev, come to you and highlight the sectors where you see strength into the coming year.
So we have been overweight on some of the interest-sensitive names like automobiles, private banking, NBFCs, and some of the sectors like pharma, etc. But do keep in mind the fact that over the last 1 month, we have seen a big rating in most of the automobile companies. We have seen again a big rating in the NBFCs also. Banks have also gone up. So now I'm honestly struggling now with, because of the fact that whatever strategy one had thought for 2013 in terms of an interest rate inflation coming down, and maybe some of the interest rate sensitive names benefiting in the process, most of the stocks have rallied well ahead in anticipation of these changes. So many of the stocks are now pretty much trading at a fair valuation. For example, if you look at Bajaj Auto, and we have been positive on the stock for some time, we have actually revised the target price twice over the last 4 months, from 1675 in about June, July to about 1875 and 2100. And the stock has actually come to 2100. We are looking at an EPS of about 135, 136 for 2014. The stock is already at almost 16 times now on 2014 earnings. Same if you look at NBFCs and the banks, we have seen a big rating of most of the names over there. Something like LIC Housing Finance, Mahindra & Mahindra Financial Services, Shriram, they've all gone up between 15 to 25% in the last 30 days. So your strategy has to change according to valuations. You cannot have a buy at every price level, and which is where I am coming to the fact that stocks have become expensive. So whether you want to keep randomly increasing multiples and chasing stocks and stock prices upwards, I leave that to investors.
Ashwini, come to you, and technically how are you positioning yourself in this market?
Well, it appears that we are going into another sideways phase, a phase that we just had in October. What's happening is that the market, covers lots of ground in 5 or 6 days, and then it spends, a long time in these ranges. So chances are that we should remain in this 5800, 5950 type of band, and maybe only in the next year we could break out on the upside. But individual stocks, they'll keep moving up. The clear theme for next year is probably the mid caps, because large caps will need to now move sideways for a long time. So the idea should be to get into stocks which are coming out of those 4 or 5 year type bases, because mid caps have been in a bear market for about 5 years now. So large caps more and more are likely to be sideways before the next move happens.
Sanjeev, coming to you now, it is evident that the government disinvestment drive is in full gear. Several corporates are also deciding to reduce the ownership in the company, and primary market activity has also picked up steam. What is your own expectation on going forward? What will be the key trends influencing the market?
I don't think so. See, there is enough of global liquidity at this point of time. You have the Fed, which is on a very loose policy for an extended period of time, and has actually linked the policy to unemployment rate. So till the time unemployment comes down to 6.5% in the US, the Fed is going to continue the policy. ECB is, on an unlimited bond buying program, so that is also injecting a fair amount of liquidity globally. And presumably Bank of Japan will also have a looser policy, influenced by the outcome of elections in Japan. So if that is the case, global liquidity will continue to be fairly strong, I would expect, for the next few months at least. As far as the domestic environment is concerned, obviously you have a lot of money coming into India in the last 11-12 months. Year to date, if you look at the inflows in the Indian market, that's of the range of about almost $23 billion from FIs. Domestic investors have been pulling out money. Somewhere about $10 billion has got pulled out from mutual funds. There's also life insurance companies. But of late, what we are seeing is some amount of revival of interest from domestic investors. It doesn't look like the redemption pressure is as high for mutual funds and life insurance companies as it was in the first 9-10 months of the year. So yes, you're right, primary activity is picking up, more driven by the fact that people are searching for choices, because most of the, as I was saying earlier, large cap stocks in India have become fairly expensive. Most are discounting 2014 numbers now, and maybe even 2015 numbers. So at least if you have new companies coming to the market, you have some choice available, and if the valuation makes sense, then you are seeing investors coming in.
On 18 now. All right, Dipan, come to you on the commodities rally that we've been seeing for the past couple of days. Are you bullish on the cyclicals for 2013?
Yeah, I think that cyclicals will do well, considering that they've been large underperformers, and seeing the kind of liquidity which is floating around globally. We should expect commodity prices to at least strengthen a fair bit, and that will have a positive effect on commodity stocks. But the question is whether investors should be participating in these stocks, because over the long run, commodity shares haven't really delivered in terms of value creation. So although there's a bit of a trading opportunity in these stocks, per se we are not very positive on the long-term fundamentals, as well as the capability of these businesses to deliver good growth for capital appreciation, rather, for investors. So I would say that one would, if you're a long-term investor, then better to take a pass on this one. But short-term investors, traders, certainly there's an opportunity over there.
What about cement, ACC, Ambuja, Grasim, Ultratech as well?
I think all these stocks have rallied significantly, and base effect in terms of earnings also will catch up with these companies. So at best, I think that the sector would be a market performer, and maybe the opportunities lie more in some of the interest rate sensitive sectors, like ones engaged in infrastructure, engineering, construction, or for that matter, even some of the other sectors like say real estate or automobiles, or even some of the rather I would say the NBFCs or the private sector banks, maybe some of the PSU banks. So the strategy for the next year has to be to bet on interest rate reduction and the businesses which benefit from it, either by way of higher volume growth or by margin expansion. And that should be the focus area, rather than some of the other commodity stocks or the FMCG or the consumer oriented, which have performed very well over the past. The consumer oriented have performed very well over the past year or so. So you could see some flattening off over there.
Right. Come to you, Ashwini. And what would be your specific calls in the commodity space?
Well, JSW Steel is a buy with a stop about 815, target about 860. And Hindalco is a buy with a stop about 128, target of 145. Most of these stocks are getting out of medium-term ranges, so some kind of bottoming has been signaled, but I think they will take time in picking up further steam from here. So maybe the short-term profit is there, but I think even on a longer-term basis, these stocks are now bottoming.
Sanjeev, come to you. As a house, Kotak has a sell on ACC. Cement is marked outperformers if one assumes that the economic activity will pick up and demand for cement will only improve. Why are you bearish on cement?
Well, that's true for every price point, right? So, that is valued at 5p, that's valued at 10p, that's valued at 20p. And most of the stocks in the cement space are trading at north of 18p as of now on 2014 earnings, and we have a fairly aggressive increase in prices for cement and improvement in profitability for cement companies next year. And despite that, on a big improvement in earnings, you're still looking at stocks which are trading at about 8.5 to 9.5 times on 2014 EBITDA, and about 16 to 20 times on 2014 EPS. So it's ultimately a call and valuation. How much do you want to play for effectively commodity businesses? Honestly, if you are looking at some sort of a mid-cycle earnings for a cement company at current levels, there is no way you should be paying more than 10 PE multiple for this kind of a business. So unless and until the market is assuming that profitability of cement business in India is going to be far higher than what we have seen so far, it's a difficult call to make. Yes, it's possible. If the cement cartel in India continues to thrive, it's a possibility. But honestly, I don't want to recommend stocks to investors, which run on a rather unsustainable basis of a cartel running the cement business in India.
Go across to our research desk where Poonam joins in with stocks to watch out for tomorrow. Poonam.
Well, Tanveer, we have Tata Steel for tomorrow. Again, metal stocks have been rising globally, and of course we are seeing a lot of stock price movement in India steel stocks as well. Analysts remain bullish on the steel sector. Steel, iron ore prices are seeing a recovery after hitting 52-week low in the month of October, and Nomura on steel sector states that the steel cycle is bottoming out and they do see slow recovery going ahead, and in the second half of FY13 the recovery will be driven by stable steel prices as well as lower coal costs, and hence we have a buy rather on Tata Steel.
Right. Dipan, come to you. What would be your ideas for tomorrow or the near term?
No, I don't think we're having such short-term trading outlook for that matter. But I think into 2013, I think the ideas which have worked well for 2012, at least in the first quarter, look stable and will continue to deliver, that being basically private sector banks, some of the NBFCs and pharmaceutical companies. They delivered good returns, and we feel that these stocks may have some more way to move up.
Ashwini, what about you? What would be your recommendations for tomorrow?
Well, Z is a buy with a stop about 218, a target of 236, and the ones that I gave earlier, JSW Steel, which was a buy with a stop about 815, target of 860, and Hindalco which is a buy with a stop about 128, target of 145.
Sanjeev, you mentioned about your preference towards the auto names. Would your list be restricted towards the outperformers in the basket right now, the likes of Bajaj Auto and M&M, or for that matter even Tata Motors, or would you look at a Hero MotoCorp as well?
We have been overweight on Bajaj, M&M, Tata Motors, and we like among the smaller names, other than Sumni, we have had a negative view on Maruti and again a negative view on Hero. So it's slightly, what should I say, different picture for different stocks depending on the valuations and what kind of outcomes we are seeing for the different entities as we head into next year.
Right. Poonam, come to you on your last recommendation or stock to watch out for tomorrow.
Well, again, very bullish on ING Vesta. It's a private sector bank. It's trading at 1.6 times FY14 price to book value. This bank has a very stable asset quality with near over 90% of provision cover. So that's the net NPA comes down to just 0.13%. Also, the margins have very good margins, healthy margins at 3.45%. And in fact, in the last quarter, margins improved both sequentially as well as on a YOY basis. Management is likely to raise capital in somewhere in the mid of 2013, but overall majority of the analysts are bullish on the stock and therefore a positive recommendation on ING Vesta as well.
Okay, thanks very much Poonam for giving us those stocks to watch out for, and thanks very much to all three of our guests, Dipan, Sanjeev as well as Ashwini, for joining us and giving us their perspective on the market. With that, it's a wrap on this edition of Markets Tomorrow. Thanks very much for watching.